Okay, good day to all. Sam here with you on Tuesday, October 16th. We're middle of the day. Now, as it's a Tuesday, we alternate here. So we're looking at traditional assets. We've got a lot of people that are frustrated by 10.5 months into the crypto bear, and a lot of interest in diversification into other asset classes. So I like to use these little sessions here as just to demonstrate what I've been saying for over a year now. Everything we're teaching you it's applicable to any asset class. Foreign exchange tends to be very technical. I do like to encourage you to look longer term. So very important to consider where the longer term swings, and if there's a count that you can get your arms around to continue to evaluate. Always check back to the daily. Where are we on the larger degrees? So just to demonstrate here. So this I always try and find some teachable moments here. And yes, we're going to get over to the hard right edge and see if there's any trading that's there or any opportunities that are setting up. But I like to use these as just to continue to demonstrate what we're teaching here. So in this particular case, whenever you have these major kind of swings like this, they just scream at you. This is ideal for pitchforks or median lines. So here, I couldn't help but notice this one. So if we just grab something like this here and we get our dominant pivots here. Now these are daily pivots. So when it first comes up, you look at that and go, well, how is that helping me? Well, this is a perfect example of when you might defer to a modifier. So as I've shown this many times here, you've got three choices. So the original recipe here, you've got the shift or the modified shift. In this case, I'm going to go to the modified shift, which just to go over that, if you've not seen it before, we come down 50% in price and we go over 50% in time, right? So you look here, so the 50% here, so here's our 100%, here's our 50, this is the 25.75. So as we move through this, but this is, take note here, so as we come back down here, we come all the way back to this median line. Now this is a median line, this is going back to 2009. And I know it's easy to think to yourself, shit, man, is that really going to have any impact in the market 9 years later? That's damn near to the tick. So of course you would look for, that wouldn't be enough, right? So you would want to look for any other confluence. So if I just grab swing low, dominant swing, right, as I like to say, dominant swing high to swing low, I'm not even worrying about the count going into that. So here, this is the kind of thing that we teach and encourage you to look for. So you have confluence here. So you have a median line right as you're approaching the 618. You've got low volume node here over on the volume profile. You've got a few little pivots here that seem to have been important to the market. That was important. Now, of course, we did have this one here as well, which it had no trouble getting through. But note here, it got through it right here. So, but note where the wave 3 in this move ran into resistance, and we come up here and so how do you know? Well, you don't really know. Is it the median line? Is it the 618? Well, definitely they're defending at the 618. So we know that's there. And then the median line, just, whether or not an algorithm is using it or not, it's just one more thing we can lean into to build your confidence that this is an area to be looking for a sale, right? And then on top of that, we had this very clear 5-wave structure that came up here completing that count. So no matter whether you go back one and look here, well, now you're at the 50 right as you hit the median line. So there's a good example of confluence where you're checking multiple pivots. So you get this nice little pocket right here. Whoops, get that back here again. So note here, if we work from these, this is just the ideal thing you want to look for. Right, so I've got nice confluence here. So I've got my little hot box right here. So I've got the confluence of a median line, a 9-year median line. It's hard to believe, I know. That's sitting right here. So you got the 50 is literally on top of this prior support. And then you've got your 618 and your golden zone right here. So if you drew that up, now granted, this is a daily chart, so that's not an insignificant range, right? So that's 25 to you've almost got a full point here of an area to be looking for a sell, and that's where, of course, going down to a smaller time frame will help you in there. But just a good way to identify an area where you might run into a reaction from the market because of the confluence of technical events that are there. All right, so now it's a little tricky as to where we're headed next. So and I think that's why members are interested in an update here. So having demonstrated that, again, I just want to emphasize this, as I've said this before. If there is any one secret to trading in Forex, is to trade long term. It makes for boring trading, but much, much more profitable. So if we look here, this low down here, this is the 2017 low. Right? This is the, what is this? This is May of 14. This is a 2.5-year trend, just straight down. Right, so these larger swings. So the reason to do that is you avoid all the noise. There's so much noise in FX because it's so hypersensitive to the last report, last comment, last thing said, last tweet. It's hypersensitive on these lower time frames. So if you step back and look at these much larger trends, they are incredible. I mean, it will blow your mind how technical they are. And it gets you positioned where you might be in a trade for 6 months, a year, 2 years. It can be longer. So again, it's not for, if you like that, 5, 10 trades a day or even a week, this may not be the market to be in. Now, certainly there are plenty of trades in there, but again, I come back to where I started. If there is any one secret to trading in FX, it's work off the longer term time frames. Really, I would just encourage you to go back and if you're looking, whatever pair you're looking at, do some analysis. Go back to start with a daily. Look at a 3-day. Look at a weekly. I think you'll find how much more clearly the technicals will present themselves, and you'll find that it's very, very, very responsive and trades very technically. So, all right. So all of that said, let's get down into where we are now. So we know we have a significant level up here at our hot box. Let me go to let's go down to the 4-hour. Excuse me 1 second. Clear my throat. Okay, so here's our little hot box up here that we drew. Now here's where it gets a little tricky, right? And this is, it's partly what makes trading interesting and challenging, where we have multiple scenarios. So when you have that scenario, you got to pick a side, or you just stay out of the trade. If you can't be clear about what's likely next or where the probability zones are, might be just a point to consider. Well, maybe I need to be looking at something else where I can see it more clearly. Well, this is definitely challenging here. So coming off of I'm going to move this here as we've got this established here. So we know this is a significant pivot. Well, so coming off of this, and I think it's a little easier if I do it this way so you can see it. So it looks like we have 1, 2. Down here, we double bottom into our third. There's the 4, and then we come down in a diagonal for the 5th. All right, so there's a clear, nice, clean Elliott count coming down. So no question that we can identify this as an impulse. Well, since we came off of an impulse coming this way, right? So let me go back here. Let's go to the 8-hour so you can see this. All right, so we had a very clear impulse coming up, right? This is what went into our technical pivot where we had all that confluence. So we have clean 5 going up. Well, now we got 5 coming down. So, right, there's only a couple of things that can be. So because of this, and this is right. So here's the election, and this is the Trump trade. So coming down now from that, so a clear 5 up and then 5 down would imply that what we have so far is an A wave. So we've got a completed 5 waves down, very clear, very technical. We finish with this nice little ending diagonal, and we finish into this 5th of what would appear to be an A wave. All right, so 5 down, there's our A wave. Well, if we think about if we take this from swing high to swing low, where are we looking for the B? Well, we know the B, high probability zone. Well, we get a big range, or this is particularly here now when we're on an 8-hour chart. So we have a big fat range. So the range for a B wave, anywhere from the 50 to 786. Well, that's way too much for us to try and trade that as in enter here, stop here. It's just too big of a range. So we've got to use some of the smaller time frame and some of the probability zones where we might find and look for an opportunity. So if that's A down, well, let's open this up now and see what's happened. So I'm going to go to the 3-hour. So we have had this 3-wave counter trend that has corrected, that is serving as the correction, but we've only gone to the 382. So certainly it doesn't invalidate the idea that this could be our B wave here. That could be our B wave. We've got all the ingredients. Nice clear 3-wave structure. We finish with a diagonal here into the C. But you have to pause for a second and think, well, I know that's lower probability. Again, it's not that it doesn't happen. It's just that it's lower probability. So if we're looking for something in this range where we know the most probable zone is from the 50 to the 618, so that shrinks our zone down a bit here. So we have this range now. So if we think about what we might be doing here, well, if this is just the A wave coming down here and we've done a 3 wave here, there is the possibility now that we're doing something along these lines, so that this would be our A. Perhaps there's a B going in. Right? I'm reluctant to put this down here because when we go through this count, you'll see why I think we have lower prices still yet to come, but it could be something along these lines. Right? That would be, if you think about the length of time, the symmetry would be better here, and this would put us into our probability zone. Okay, so that would be the idealized way to approach this, right? So if we get, oh, nice clean ABC, we go into that high probability zone, sets up the trade to be pushing for that move down there, all right? At least first algo target. Well, there's some challenges here when I'm assuming this is why I have members interested in what's going on here. So if we break this down, I'm going to go down to the 1 hour. Well, you have, again, this is kind of a good example here where you can use the Elliott here to help you reduce some of the uncertainty. So we have, so here's this ABC, right? So of course, we're going to check it, see, is it technical, right? So no surprise here. Right, so it looks like these are slight front runs. It looks like that's a slight front run as we double bottom down here on the 50, and yet they don't quite get to target. Could be a front run. It's hard to know. Hard to know. So we look there and we think, okay, well, how about, is there any market geometry that might be helpful here? Now remember, I have this set to modified shift. All right, so, you know, again, when you see that, I know your first reaction is, oh, come on, man, it's just kind of coincidence. Well, I would propose to you that there just are no coincidences in the market. I just don't think you find them. If you do, it's very rare. So, you know, that's the length of the A projected from the B. That's 618. That's, you know, and a double tag of the median line. You know, you can't ignore that, right? So this certainly is a zone to be paying attention to. So this was significant to the market. All right, so let's think about that. Okay, so if this was ABC. If that is, and we're only getting to the 38.2, and in fact, the wicks to get through, or perhaps, right, it's always you kind of a guesstimate here. So is this an algo trying to get to median lines? It's hard to know, right? So remember, we also had the 50 up here that we were shy of. So it's an educated guess. But I know this area is significant to the market. Well, if you're thinking ABC, and we're going to allow for the correction to be at the 38, lower probability, but still does not invalidate the count. Well, we'd be looking for 5 down, because if that's an ABC correcting this first 5, well, then we have the possibility that we have an impulse coming down here, and this is just a 1 wave. So we'd be looking for a 1-2. So if I grab this down here to this 1 wave low, right, just like just like a B wave or a 2 wave, we'll take note of what we've just done here. We've just tagged the 50, and there's a count in here that would suggest that there's, you know, we might have something here to pay attention to. So you can see here as we tagged the 50 and then bounced off of it. Well, yeah, I'm going to go down even to a smaller time frame, because let's think about that. If this is, well, let me back out here just to try and show you what the struggle is here. All right, so if this is 5 down, and we've just corrected, and the correction here, and it's going to be, if we're going to have an ABC, well, we're shallow here, right? That's the conundrum here. Yes, we have the median line there, but we're shallow on that pivot for a potential B wave. Well, we've had 5 down. So if there, certainly it wouldn't invalidate this count that because I've got 5 down, this 3 wave could be the correction. I don't love it as much, so I'm a little hesitant because it's shallow, but I've got 5 coming down that I can't ignore. So there's only a couple possibilities. Either we're going, this is 5 down, this would be an A, we're putting in the B, we're gonna go down again for a C before going up. So let's see if I can draw this here. So we'd have something along these lines going down again for a C. So we'll use the algo target, and then we're going up for the B. Right, to give us a much larger degree, which would be like this. So we'd be going from here. So we'd have A, B, and then potentially C coming in here. Right, so if that's the case, then we also have a kind of a conundrum here, and that would be a very deep B wave relative to this move. again, not that it disqualifies, but it kind of leaves you scratching your head going, well, that's not really where I'd want to find that. We'd be all the way, we'd be below the 786. We'd be pushing the 887. If I put that on, yeah, well, it will be very close to the 887. I'll spare us that. So you got to look at that and think, okay, if this is A, B, C, this is either 1 or A. Well, how are you going to know? Well, you're not going to know until you see what happens here at the next retracement. So this will be the pivotal point here. So let's, now having explained that, in that I'm concerned about this potentially going down here to create the B down here. So I'm reluctant to be aggressively selling up here because of the 38, because we didn't make the 50. So I would have two scenarios here. One that would bring this down as an ABC into a deep B, and then a big push up here that would need to be a motive weight. Would need to have 5 in that. All right, so let me clear this chart up a little bit. All right, so the problem, this would be ideal if we had a 3-wave coming down. This would be no problem. We'd be going A, B, up we go for the C, but that's not what we get. So let me go back down to go to the 30-minute. Okay, so it's hard to argue with this 5-wave coming down. Right, 1, 2, 3, A, B, C into a 4, and then we get a 1, 2, 3, 4, 5, and it's technical. So if we look here, this is a good example here of a diagonal. So it's always the start of the 1. You're looking for the pivot after you take the start of the 1 to the pivot of the 3. So let me clear this up here a little bit so you can see it. Okay, so here's the trade. Right, so you can see tag the 50 here to the tick. Doesn't get there, come back. Look, they get the 233. We get back to the 50, and then we come down here, and that's likely, there's your front run on the target. And now we've gone straight up from that. So if that's a completed 5, right? A completed 5-wave brings us down here. We get a technical pivot down here. We've got a clean count. Well, it's either a 1 or an A. So here's the idea that it may be a 2. So we've got to open this up here. So if this is going to be a 2, well, of course, first we're going to draw up the retracement. I know this gets a little tricky in here. I'm sure this is why members wanted to see a little review. Okay, so here's your first 5-wave structure. Now we've come up to this 50 and tagged it. Are we done? Well, you had a pretty good reaction off of that. Makes me think that there's something else there. So I'm going to go down to the 15. Open this up here. Okay, so I can see a 1, 2, 3, 4, and then potentially I've got yet another diagonal. Note the 1-wave here. So this would have to be A, B, C, A, B, C. Right, we'd have something here. So I look at that and I think, again, it's another diagonal. So just as we were looking at the diagonal here, right, we were looking for the pivot on the 4 and then looking for a technical pivot here, I'd be looking for the same thing over here. Here's the 4 low, here's the start of the 1-wave, here's the pivot of the 3rd wave, and what do we get, right? So we come deep here. So same kind of thing. We get a few wicks through to create the diagonal. It looks like you'd have to go A, B, C up into this to get us that target, but then yet again, so there's another example. So we get confluence here. We get confluence. We get a slight front run on target right in front of the 50, and then look at that reaction. Right now, granted, we've gone from the daily down to the 15-minute, but that's 116. We're almost a full point. 116, what are we sitting at here at 1585? Well, not quite, but we've had a pretty sizable move down off of that. Yeah, yes, there was. So here's a good example. Yeah, there's some news, right? So we get just a straight down. So there's what I'm talking about here is how noisy this is, right? Look at these swings, right? Yes, you can trade in here. I'm just telling you, it's much more difficult. You're gonna have far greater numbers of trades, i.e., more trade cost. And you're going to have far more stop outs, right? It's just hypersensitive. Just you can see it here. Look how hypersensitive we are. Oh, straight down. Oh, we got to go back up. Well, we're down. It's just hypersensitive. Again, it's not that I don't trade down here at these levels, and I'm not discouraging you. But if your objective is, or if you don't have time to watch the market all day long, I really would encourage you to look at the daily trends, daily wave counts, daily opportunities, and you have to babysit the trade. All right, nonetheless, for those of you that are interested in where we are and can manage this throughout the course of the day, well, we've got a confluence zone over here that suggests that perhaps we've completed a 5-wave structure, right? So in green, 1, 2, 3, 4, we've gone up. So from the low, we're going to go all the way to that high. Now here's the next zone we'd be looking for. So let's think about where that would put us. Let me go back out to that 3 hour. Well, if we're coming down here, this is what I was talking about, where you're not going to know. You're not going to know what we've got until we see the next reaction here. So we get a classic algo fib fight. So swing high, swing low, we come to the 50 reaction. Now, do we come back down here? If we do, what does that mean for us? Well, if this has topped here, so let's go get that up a degree. All right, so if that 5 has topped there, so we've had 5 down, we've had 5 up. All right, so that's a lot of 5. So you're thinking to yourself, oh shit, man, well, what do we got here? So it's either A or 1. This is either A or 1, right? And well, it'd be a stretch to turn this into an ABC. So I think it's either 1 A. So this is what I mean by thinking that there you got to be prepared for 2 alternates here, because we could come here, go up and put in the 2 and then head down. We could go up here. We could come down here. If we break this and we head to this target, right, then we go back to that first count. So there's no way to be definitive because we've had a 5 followed by a 5 followed by a 5. So if we're going to come in here, that is where I think the trade is. All right, so that would put us, so then if you think about that in terms of swing high to swing low, so note what we get here. Right, so we get the algo target right in front of the golden zone. Now, what else could we do to construct a roadmap? Well, if this is a good pivot up here, and we're going to come down here, go back to original here. You always start with original. Right, now we get that. Now this looks kind of interesting. Right, so you have potential here that you're going to go back up that. So that's the only way you can get any confirmation. So you're taking a trade unable to confirm, right? So therein lies the risk. So you can't confirm where we are because of the 5 followed by the 5. So either this is the A wave or this is an A wave. Kind of makes it problematic. So you've got to be disciplined about the stop, right? That's clear. If if you have any directional bias as you come into that might influence whether or not you see this going down here to fit and the 2 is in. Right? I think that's less likely because of the fact that we have this 5-wave structure. So you've got this kind of conundrum. Of course, you'll have this as well, right? If that's gonna hold, and if this is gonna hold here. So you see what we've got here? We've got 2 algos fighting it out. So if that's a 1 and the 2 is in, we're going minimum here, minimum, potentially much deeper for a third. Right, but that's just the first target you would line up. If this is an A, and then we are going A, B, C to put in the larger 2 here relative. So this would be coming down. Well, I've got it here. This would be 1. Let me just make that brighter bigger so you can see it. Here's minuet. Okay, so if we're going 1, 2, then here's the opportunity to sell. So that I like a lot, right? So 1, 2 coming down here. This target doesn't move. The only thing that would move is where we're getting into that short. So if I can do that, right? Target stays down here. Now, if that's the case, then maybe this has to go to modified shift. So again, same thing we just did before. So we know modified shift has been very responsive. So now we get potentially something like, depending if we get there, right? Could be here, could be lower. We don't know. Right, so there is no way to be definitive about. So you've got to just tee up the trade, know that there's risk involved. You've got do the analysis on risk reward. Looks like you'd have at least 3 to 1. If I do that, let's just take a look at it. So if you bought the 50 here with an algo target here at the golden zone, stop on the other side of the 65. There's 4 to 1, a little over 4 to 1. Now if you catch the turn coming back, right? So this is that's what we all love to see. If you can catch that going down here where you get the double. So there's 12 to 1. So I would certainly pay attention here as to what, so I would want to be alerted. So maybe a good idea, let's see here. So as you come to this pivot here, I'd want to know what happens here. Or since we had a reaction at a prior 38, so we had a reaction at 38 here. So I'd want to know when we come to the 38, do I get any kind of reaction? Do I just carve right through it? Note the point of control here is smack dab in the middle. So we've got, here's a 50 and here's a 50. So we've got a big fib fight in this range. So there's just no way to know. So you have to tee this up, right, on the idea that this is not a completed correction, so that we're still correcting this move down, and all we've done here is put in an A wave. So this would be A, B, C into the 2, sets up the bigger move down. All right, so here's the buy side. Now, if you get stopped out here, then we'd reevaluate and have to recount it. If this is going to continue to go, we're going to do this. If we're going to continue to go down here off of this target, right? So off of this 50, here's the target. If we're going to continue to go down here, well, now you got to put that all into that bigger context, right? Could we be doing an 887 and be going that deep? That's lower probability that we would hold here and that we wouldn't go down and ultimately break that pivot. Now you're into a clear 1, 2, 3. Right, but I just don't think it's there yet. I think the better trade is wait for that. If you don't get it, right, so be it, right? So you wait for the next setup. So here you'd have much stronger probability here if we get this pivot here, because then you could be definitive. Then you'd know, okay, 1 is in, A is in. Do we do this in 3? Right, that's another huge factor. Is what do the swings look like coming down here? Are we going to do something like this? Are we going to go down in 3 and then set it up for the potential C wave here? All right, so next opportunity I see is on the buy side, but I'd be really teeing it up for the big sell down here, looking for that to go much lower. All right, guys, that's, 26 minutes. Okay, I went a little bit long, but there's a lot of detail there, and hopefully there's some things that you can use and apply. So when you have this scenario here where you just can't be definitive, you can at least, there's still a trade there, but just recognize that if nothing else, if you take the loss here, the market's giving you more education. So if that starts to move down, then we could look for the next retrace to take that 50 to get in sync with that trend. All right, guys, with that, I'll wrap there. I think I've got one more to do today. Okay, talk to you in a little bit.